Hello, everyone, and welcome back to this week's Ship Recycling Market podcast. I'm Ingrid.
And I'm Henning. And Ingrid, this week really felt like the market took another one of those classic roller coaster drops.
It definitely did. The big theme this week is what we'd call a gravitational drop across the global marketplace, mainly driven by the US dollar weakening across almost every ship recycling destination.
Except Turkey, of course. Turkey always manages to move in the opposite direction.
Exactly. But before we get into the recycling markets, let's quickly touch on the wider shipping picture. The Baltic Dry Index fell about 0.7% this week, dropping to a 2-week low.
And the Capesize sector was the main drag, down about 1.1%, while the Panamax index slipped around 0.4%. Supramax was the only one showing any real stability, actually rising slightly by 0.2%.
On the energy side, easing tensions between the US and Iran helped calm supply disruption concerns, and oil slipped below $62 per barrel. It recovered slightly and ended the week around $63 and 15 cents per barrel.
So freight markets remain firm overall, but there's clearly a softening mood creeping into the background.
Now shifting to the ship recycling markets, especially the Indian subcontinent, there are faint signs of life returning as we head further into February.
And that's important because the year started off sluggish and almost completely inert, with a lot of buyers wondering if the weakness would be temporary or something more serious.
But this week, one major driver was steel. Steel plate prices surged across all subcontinent destinations, with Bangladesh, India, and Pakistan all reporting strong weekly jumps.
And the other key theme remains the same, the shortage of recycling candidates. There's demand, but not enough ships being offered.
Exactly. We are still seeing older handy bulkers and even some LNG units sold early this year. But tankers and container ships remain largely absent.
Let's start with Bangladesh because Chattogram surprised the market once again.
It really did. After dipping below the psychological $400 per light displacement ton mark earlier this year, and even briefly ranking at the bottom, Bangladesh is suddenly back in the picture.
Anchorage activity picked up too. Several deliveries from last week were completed once the tides broke, and there was even the arrival of a rare large light displacement ton tanker.
Domestic fundamentals helped. The Bangladeshi taka strengthened by about 0.65% against the US dollar this week, closing around 122.05.
And steel plate prices in Bangladesh finally woke up after 2 quiet weeks, jumping nearly $9 per ton to close near $494 per ton.
But the major issue hanging over Bangladesh now is elections. Mid-February is approaching fast, and there's already speculation building, along with the usual political noise.
There's hope that a more progressive and pro-business government could trigger a surge in local markets, especially if delayed infrastructure projects restart. But for now, it's still very much a wait-and-see environment.
Now moving on to India, Aliaga buyers have reportedly secured some interesting units recently, including another high-profile LNG, along with several smaller market and private units.
But overall, port activity remains weak. Total tonnage at Aliaga is still just over 36,000 light displacement tons, which shows how quiet the start of 2026 has been.
The biggest movement in India this week was again on fundamentals. Steel plate prices jumped around $14 per ton, reaching nearly $415 per ton.
And the currency shift was significant too. The US dollar dropped about 1.3% against the Indian Rupee, closing the week around 90.08.
That's a strong move in a single week, and it gives Aliaga recyclers more breathing room on pricing.
Plus, India still holds the major advantage on Hong Kong convention compliance. Most yards in Aliaga are certified, which keeps India strategically positioned for future tonnage flows.
Now, Pakistan has arguably been the most interesting story of the last few weeks.
Absolutely. Gadani has gone from being on the sidelines to leading the subcontinent. Several Panamax and handy bulker sales have been reported, and buyers are still paying above $400 per light displacement ton.
Steel plate prices in Pakistan surged again this week, rising nearly $8 per ton, closing at around $597 per ton, which is currently the strongest in the region.
And the Pakistani rupee strengthened as well, gaining about 1% against the US dollar, closing near 279.14.
But perhaps the most notable change is the activity at the anchorage. Gadani finally saw a near 7,000 light displacement ton vessel arrive, breaking what's been a very quiet start to the year.
And there's also positive progress on Hong Kong Convention infrastructure. A second yard has been approved recently, and more development appears to be underway.
Now, Turkey remains quiet again this week.
Pretty much still life is the best description. No major sales, and Aliaga continues to sit in the background.
Interestingly, though, Turkey was the only recycling destination where the currency weakened against the US dollar. The Turkish Lira slipped slightly to about 43.58.
And it's edging closer to 44, which doesn't help sentiment.
Now, looking at pricing this week, Pakistan is leading the rankings. Indications are around 420 US dollars per light displacement ton for dry bulk, 440 for tankers, and 450 for containers.
Bangladesh follows close behind at around 410 for dry bulk, 430 for tankers, and 440 for containers.
India is slightly lower at around 400 for dry bulk, 420 for tankers, and 430 for containers.
And Turkey remains far behind, with levels around 270 for dry bulk, 280 for tankers, and 290 for containers.
So overall, this week feels like the market is trying to wake up, but it's still not fully alive.
Exactly. Stronger steel prices, stronger local currencies, and improving demand are all positive signs, especially in Pakistan and Bangladesh.
But the shortage of tonnage remains the key issue. Buyers are hungry, but there simply aren't enough candidates being offered.
And with geopolitical uncertainty continuing to keep freight markets propped up, it's hard to see a flood of ships heading to recycling just yet.
For now, it's a case of waiting for the next wave of market units and seeing who's still standing when they arrive.
That wraps up this week's podcast. Thanks for listening, everyone.
We'll be back next week with the latest ship recycling market updates. Until then, stay safe and stay sharp.